Stacey Murphy here, Dreaming Earth Incubator. This video is milestones at each stage of investment, how investors see you and how they measure success at each stage. All right, so here we go. So pre-seed is usually very early stage startups. This is where you're going from idea to something tangible. The milestones here are idea validation. So you're basically looking at the market and saying, here is a clear problem and here is a clear solution. And you're identifying what that market is. This is harder than it sounds. Most people get this wrong. They think they have a solution to something, but they just have a product and they don't know exactly where it fits in the ecosystem of the world. So it takes a little bit of time. And I highly recommend going to our other videos, week number 2, that we're basically talking through different pitch ideas. This is something we talked in great depth about. A next milestone in that pre-seed is your initial concept or prototype. So this is an early version of your minimum viable product. Some people call it the saleable viable product. What is the saleable viable product? So this is a very initial concept of what it might be, and something in very tangible terms. It's a black box and it does X, Y, and Z, and it is this big and it's made of these things. The next piece is your founding team. So this is where you want complementary co-founders. Then you want early market research, evidence of demand. So you're going to do the research and you're going to say, okay, specifically, you're going to look at, okay, am I selling to contractors? Am I selling to construction companies? Am I selling to end users? Who am I selling to? What is that market? And what is that market share look like? And who else is selling something to them? And how do I compare? So you're doing all of that market research, which is part of your pitch deck. And then at this early stage, you're basically, the investment will probably be family, friends, or angels. And success metrics at this stage is a realistic plan to get from a concept, which is like, it's sort of tangible. I got this idea and it's sort of tangible, to now something that is physical in the world. And your willingness to pivot and respond to feedback. Investors love this at this stage because you're going to pivot so many times, and that's what you need to do in the early stages. And then the pitfalls at this stage is that people will build a product with no audience. It's like if you have a hammer, everything looks like a nail. You're like, look at this amazing hammer that I made. Isn't this hammer incredible? And then somebody says, well, what do you use it for? And you're like, everything. Everything's a nail. Everything's a nail. And so you really want to understand who the product serves, what the product does. And the other pitfall here is overvaluing the company. And this can be dangerous because when you create your cap table later, and if you've overvalued the company, you can dilute all the equity really, really quickly. And so this is something that can really hurt you in the long run. The other way that it can hurt you is that if you overvalue yourself, you're going to look bad in the investor's eyes, and you're not going to be able to make up that value. So you want to really start more conservatively in your valuations, and often in pre-seed, there's really no valuation. So I would recommend not valuing your business in the early stage, and basically you're going to wait until your first investment, and hopefully at this early stage with friends and family, you're not giving away things. All right. So this is where you're conserving resources. You're not giving away equity if at all possible. You're really focused on creating that problem solution fit and making something tangible. Second stage is seed stage. This is proof of concept. And so this is where you're going to get paid customers and feedback. And so milestones here is that you need a minimum viable product, and you need to be ready to test it as a market fit with your specific clients. And you want early engagement. You either have paid clients or beta testers, or some kind of prototype test site somewhere where you're basically making it tangible in a concept. And so this is where you're going to start to refine your business model, because you're going to start to test streams of audiences and then acquisitions. So if you were in the digital world, what this would look like is you're looking at, okay, I'm selling my product, I'm selling it to these different groups of people, and which one of them is taking off faster and why, and what is the cost of that acquisition. And so you're refining your business model to say, okay, we used to think it worked this way, but now based on our testing, we're seeing some different numbers. And Milestone here too is a market fit validation. So you're going to get feedback from the customer. This works. This works under these conditions. It needs to be changed under these conditions. It doesn't work here. This is what we love. This is what we hate. You need all of that market research. And this is where you really want some growth in your team, and you might have some key hires here. So you might have an operations person that comes in. So it depends on what kind of product you have. And then investor success metrics here is they want to see a path to profitability. So at this point, you should be able to say, okay, we've done this research, we've done this fit, we have these customers, this is what we've learned, and now we know this is where we're going to be profitable and how we're going to be profitable and when we're going to be profitable. And here you're looking at an investor wants to see you able to iterate quickly. They want you basically kicking things out the door fast, throwing it all at the wall as fast as you can, so that you can get through what we would call, it's a different kind of prototyping. It's not a product prototyping, but it's a prototyping the process. And then pitfalls here are burning through cash. So some people, when they might get their initial friends and family round, and now they're like, yippee, I got money, and they're just burning through cash faster than anything. So that can be a problem. And then the other thing that can go wrong here is if you secure angel investment and give away too much equity, you could find yourself in a lot of trouble down the road because you no longer have control of your company. One of the big pitfalls here is over-promising and under-delivering. You want to be fairly conservative in your promises and really shine for your investors. And your goal here is to get paid customers and to get feedback so that you know that this is a fit for the market, how the customer sees it, and so you can find that path to profitability. In Series A, your milestones here, you're really gearing up for growth here. This is like you've got your path to profitability and now you just got to hit the accelerator. So revenue generation is a milestone. So what is the revenue and is it consistently growing? What is your expanded team? What are your other key leadership hires as you're expanding? Now, do you have a chief marketing officer? Do you have a chief technical, like what do you need in order for this growth to happen? Operational efficiency. So this is about optimizing your costs. So you want to find that sweet spot where in the start everything is messy, everything costs more money, but once you start to figure out the lay of the land, you can start to optimize where you're spending that money. And then this is where you're finding that scalable business model. So now you're realizing, okay, these are the numbers that are going to help us scale, and I have a system to do it. And this is where you start to develop your success metrics and your KPIs. So this is very much, you're gearing up for growth, which means you've got to have those metrics in place and that dashboard in place. So from the investor perspective, what success looks like is that you've got a clear growth trajectory. Like it just looks like it's a no-brainer to them. And this is where you're demonstrating your leadership ability as a CEO for this business, because this is where oftentimes CEOs start to get replaced because they're really good at startup, but they're not good at operations. And so you want to prove that you have the leadership ability to really bring this company to success. And pitfalls, scaling too fast. If you don't know your numbers, you can actually scale negatively. True story. I've done that. Where your profit margin is actually negative, but you don't realize it. And so you go to scale and the whole thing tanks. And so you want to avoid that. And that's all about unit economies. So what is your lifetime value of your customer? What is, the cost of acquisition of your clients? You want to know all of those economics. And pitfalls here is a weak sales strategy. So really what your goal is here is to craft a really compelling story for your sales. This is really what this stage is all about. And then Series B, this is new heights. So you're still on that growth, you're just new heights. So again, market expansion, you're going to go into new markets, new product lines. So you really want to focus on one product, one market line as quickly as possible, and then start to build on that momentum and enter new markets, enter new product lines. This is where you're going to do some more revenue scaling, so sustained increase in revenue. This is where you start to become a brand. You start to become a leader and known as I'm the energy guy, or I'm the this guy, or I'm the that guy. Strategic partnerships. So this is where you're going to want the right people for growth and innovation. Operational maturity. So this is like streamlined operations. Everything's just clicking into gear. And here the success metrics is really about efficiency. So efficient use of capital, they're really going to be looking at your numbers, and significant growth in revenue and or clients. So the pitfalls here, overcomplicated operations. So this happens to so many people where in the early stages, it's complicated because you're figuring it all out, and you really have to edit down over time so that you get really, really simple. Losing company culture can happen here. So you started off, the team really felt like it was in sync, and then now it just feels like everything's about, the operations and the efficiency, and there's something like that's lacking in the culture. You're like, what happened to our amazing fun thing? It got too businessified. So that happens quite a bit. And then premature entry into new markets. So if you're not ready to do it, it can take some of your cash and capital and not yield the results you're looking for, and it can really be a downfall. Oh, and so the goal there is to really build out that world-class team where they are making really great decisions, and that's part of the previous stage, is being that leader so you can really cultivate this. And then Series C, market leadership. So here, your milestones: market dominance, becoming a leader, profitability, diversified revenue streams, global expansion, acquisition. I mean, you might be thinking about becoming acquired by somebody or acquiring other companies to make yours more successful. And investor success metrics here is the ability to maintain high growth and balance operational efficiency. So you're doing everything all at once. Pitfalls: overestimating your market size, focused on too short term, and neglecting your customers. You've grown so much, and then you've kind of lost that connection to your customers, and you lose touch with what they're really talking about. So in Series C, it's all about maintaining positive public perception. You might think about Facebook and other people, seeing them on the news and what they do to maintain public perception. And then you may go public. So if you have an initial public offering, this is where you're welcoming stockholders. Congratulations, this is amazing. And so this is the really big deal, and takes quite a bit of lawyers to do. So at this point, you've got strong financials, you've got governance, compliance, brand recognition, investor relations, legal, financial, operational readiness. And so at this point, it's really about that clear and transparent communication for everybody to understand what's going on and why, because you're going public. And so everything's got to be squeaky clean and very clear. And you have to have a strategic vision for post-IPO growth. So what are you going to do after you go public? How do you keep growing? There's a memo from Zuckerberg saying to his team, we don't really have a phone version of Facebook that feels really great. So why don't we just buy Instagram? And that's what they did. So this is like, what is your vision for how you're going to stay relevant? Pitfalls is underestimating the pressure of all this. It's a lot. Overpromising, that continues to be one of the pitfalls. And failing to communicate with investors. At this point, you're public, so you look pretty bad if you're not communicating well.